Ching, 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 ching. Welcome to this Thursday, the 11th of December show. We actually have a live announcement that's going to take place in about 20 seconds. So we're going to hold off on the intro and we're going to share our screen because there is some unemployment data, which is happening as we speak. So we're looking at S&P 500 here, Bitcoin's reaction here, gold's reaction here, and then NASDAQ here. Let's see if there's any reaction off the back of this unemployment data. So we've gotten the data. We're waiting on the actual results here. What we can do is quickly have a look at the still pending here on our Forex factory. So the expectation is for 220,000 new unemployment claims in the last month, and it's still pending. It's interesting. Yeah, no real reaction here from Bitcoin, S&P, NASDAQ. Gold slightly higher. Let's see if we can. Here we go. So we got the unemployment claims is 236,000 compared to an expected 220,000. So that's slightly worse than expected, but it's not outside of the realm of possibility. So we'll keep an eye on the charts. Looks like very, very muted and very delayed reaction off the back of that data, but we'll be back right after this intro. Stay tuned. You're watching the Pre-Market Show. All right. Welcome one and all. We got a great bunch of people in the office today, ready to report for duty, ready to see what markets are saying today. So unemployment claims, basically it gives us a temperature gauge or an idea of what is the labor force looking like in the US. A stronger labor force is usually good for the economy. It means more people employed, more people willing to spend, more activity. A weaker workforce or weaker labor force tends to be negative for the economy. People are less likely to buy. Instead of buying $5 for their daughter, they're probably going to buy $1 or maybe even try and make a doll themselves. So less spending, basically less traveling, less trips for the holidays. And so labor tends to be a very big economic driver. And that's the reason why we watch it so closely here. So what we're going to do in today's show, let's break it down a bit, because we've gotten a lot of comments from people saying, look, we love the show. We want to have a little bit more structure. So first things first, we're going to cover this employment data. Second thing second, we'll talk to you a bit about the prize giveaway. Now, we are giving away a $5,000 account. If you're interested, there's going to be a link in the live chat. We'll also place a QR code. You got to fill out a form, and then we'll do the live draw at the end of today's show. So you don't want to miss the prize giveaway. If you don't mind, 5,000 buckaroos with your name on it, if you're the lucky winner. So we're going to pop that link in the live chat in a moment. We're also looking a little bit at the Federal Reserve. So yesterday, the Federal Reserve cut interest rates as expected by 0.25%. What does that mean? How does that impact my portfolio? What do I do as a trader? That's what we're going to be looking at. And then maybe look at Oracle if you have some time. Oracle announced some earnings last night. And I know a lot of people don't like trading earnings, but we'll talk a bit about how you can use a very simple earnings strategy to try and get some exposure to some earnings plays. It's high risk, don't get me wrong. It's definitely a higher risk play. But if you have the capital and you're willing to allocate it to something like an earnings play, we'll kind of walk you through the steps and what it could do for your portfolio. Then also we have a few other things we want to touch on. Maybe have a look at some charts. Our chatting chart segment tends to be one that people enjoy. So we'll have a look at some of the major charts, looking at Bitcoin, maybe some individual stocks like Oracle from last night, things like Palantir, Nvidia, and then also maybe look at gold and see if we have some time for anything else that you may wish to look at in today's show. All right, so still a muted reaction here, slightly lower here on Bitcoin after that data. So first things first, we did say we'll talk a little bit about what is all this employment data about. So the unemployment claims came in slightly hotter than expected, not by too much. If we open this up here, it comes out of the Department of Labor, and it's the number of individuals who filed for unemployment insurance for the first time during the past week. So what we're looking for is people who have become unemployed, and then they'll file for unemployment insurance. So it was higher than expected, but if we open this up, what we can do is click here. There we go. And what we can see is over the last few weeks, what has the pattern been? So this goes back to July, and we've seen as low as the last reading was the December 4th, came in at 191,000. And today's was 236. So a slight jump higher than expected. This was the expectation here of 220,000. I guess you could simplify it and say we received 236,000 new unemployed people this week, the week just passed. So that tends to be negative. It is a little bit of a lagging indicator. It tends to be a little bit, it's not one of the headlines that you'll see that often unless it's a huge miss from the expectation. But you can see it's increased from the December 4th, and it's also more than the expected 220 that economists were calling for. So that's one thing. We can take that off the list. Market reaction is key. So there are mainly three things that drive markets. It tends to be what is the sentiment? So are people bullish? Are people bearish? We also like to look at something called the commitment of traders, and that's the positioning. So where are the institutions, the banks, pension funds, where are they positioned? That's very important. And then the third thing is the price action. What's the price doing? It doesn't make any sense for you to be bearish and every day we're doing this slow upward drift. Especially if you're trading on a near-term time frame. So you have to be aware of the price action. I think that's very, very, very important. There are a lot of other things that go into successful trading, but I think those are the three major pillars for us. Those are the three main things that we tend to try and look at from time to time. Okay, let's see here. Let's take a quick moment and let's say hi to everybody in the live chat. We got quite a good group of people, and we're gonna take this opportunity to post the link for the prize giveaway in the live chat. Looks like we have ISO saying let's go. We also have Tesla Trader. The Tesla Trader is in the office from the office. So working from the office today, not working from home. Working from the office on Thursday, but I do suspect Tesla Trader may be working from home tomorrow. I don't know. We'll have to see. And we've got another great group of people over in the Signature FX chat. So let's take this opportunity now, and what we'll do is we'll do the prize giveaway info. So what you want to do is for the prize giveaway, you're going to basically look in the live chat. If you don't have a live chat, so if you're on our X account, you're gonna want to look. Where am I doing? Here. You're gonna want to look here in a minute. We'll put a little link up there for you to be able to scan. If you're able to scan from a different device. If you're watching on your phone, you may have to scan from a friend's device. Okay, so here's the form for the live chat. And what we'll do for the prize giveaway, you just have to remember, please do not enter more than once. And if you have won already this month, then you are ineligible to win. So we'll shorten that. We'll copy that. Other rules are you must post in your X or Insta and tag Signature FX or CTI. And then you'll get an email. If you're the winner, you'll receive an email from our good friends at City Traders Imperium. All right. So top left. Have a look at the top left now, and you'll see the QR code. So you can scan that if you like. The other way you can do it is looking in the live chat. So we'll say enter prize giveaway here. Okay. Okay. So you should see that link pop up. All right, go for it. So all the best to everybody as you enter. Just remember to fill out the form completely, and towards the end of the show, in a little bit, we'll be announcing that we'll be doing a live draw, and part of the live draw will be selecting one lucky winner. Okay, dokie. I think we're ready for the excitement. So we've talked a little bit. Let me get this straight. So we've talked a little bit about the unemployment. We've also touched on the prize giveaway. I think the next one, what we have next is the Fed. So we had the Fed day yesterday. What does Fed day mean? How does this impact markets? What is this? What is this all about? So let's have a look at what the Fed actually did yesterday, and then we'll walk back and explain a little bit more about what this means for markets going forward. So we're using a tool here from Forex Factory, but you can also get this calendar pretty much anywhere you get your information from. Got a message here from Rahat Sa. Top of the afternoon to you. Thank you for the hat. We were on our way. I'm saying we like it was more than one person. It was actually me doing some errands today. That's why I didn't have the live link ready. And I walked across this card place that sells Christmas cards, and they had the hat. I thought, that looks kind of fluffy. And a part of my brain was thinking, is it too early for the Christmas hat? And then the other part of the brain was like, come on, you only have a few weeks. You got to get it in while you can. So I went with it. So thank you very much. Thank you, Raz. I didn't want to mispronounce or not mention your name correctly. So Raz, thank you very much. And let us know if you are trading today. Also, let us know if you have been trading this week. It'll be great to kind of hear from you. Other than the I wouldn't call you the fashion police because you gave me a good compliment. But other than the hat comment, how's your trading going? Let us know. Okay. So yesterday, here we go. Yesterday was Fed Day. And why am I went back a week instead of a day. That was my bad. Here we go. Meant to go back to Wednesday. So there we go. If we quickly look at this was the fun stuff yesterday. So Federal Reserve came out yesterday, largely expected to reduce the interest rate by what they call 25 basis points. For all of us, it's basically 0.25%, which they did. Widely expected. We also got the they call it summary of economic projections, which is good to know where the Federal Reserve members are looking to send interest rates in the future. We got the statement from the Federal Reserve budget balance. Interesting to note that they will be starting to buy, I don't know the exact number, but multiple billions of dollars of U.S. Treasuries starting tomorrow. So I think we're back to the money printer goes brrr. So yeah, they're looking to buy up some US Treasuries starting tomorrow, also known as quantitative easing, but I think they're trying not to call it that. In the press conference, got some questions. We tried to follow along at home, and I think the main message was, we're cutting today. We will take the January meeting as it comes. So no promise there. If you want to see what it looks like, because it's kind of cool to look at it from this perspective. So going all the way back to 2013, interest rates were at record lows. They tried to do a hiking cycle. And they went back to zero rates here in 2020, 2021. And then recently, so let's say July of last year, rates were above 5.4. And then they've done what we call a cutting cycle. So they held rates here for most of January up until that fateful day in September. They did the first cut of 2025, and it's been coming down pretty steadily. So I think the question is, what happens for the next meeting? And we'll take a look here. I know this may be too technical for some of you. I know a lot of you just want to see charts and just want to see the show me the money stuff. But this was yesterday, and I think this is all relevant. So probabilities here. If we look at, as of yesterday, following yesterday's Federal Reserve announcement, now looking at the January meeting, which happens to be on the 28th, there's a almost 80% chance that they keep interest rates unchanged January, and they keep interest rates unchanged for March. There's no meeting in February because they all take Valentine's very seriously. This is likely to change, but based on yesterday's meeting and based on all the data that we have as of today, Federal Reserve is looking to keep rates unchanged until this is April. So after we get the April Fool's Day, they're looking to cut again by another 25 basis points, hold for 3, and then cut again, getting down to, I guess, that 3% target by September. So this is kind of just giving us the pathing of interest rates. It's good to know. The general rule is the market tends to like lower rates. It's great for small caps. And what we'll do, we'll have a look at some of the small capitalized companies. Those are the smaller companies, not the Mag 7, basically. But it's like the smaller capitalized companies. They really like lower interest rates because they can borrow a lot more, and they're heavily dependent on their borrowing. So if we look at yesterday, this might be a very good example here. What we'll do, I'm trying to think of the best place to go. Okay, so what we'll do is we'll have a look at the charts from yesterday, and we'll compare what would have been the S&P, the NASDAQ, and the Russell. So first things first, this was the NASDAQ. So NASDAQ was up 42 basis points, or 0.42%. We got that nice little rally after the Fed press conference. So that was nice to see. Compare that to S&P. Similar, but up a bit more. So we were up closer to 0.7%. Same sort of rally after the Fed press conference. Almost copy and paste. And then if we look at, let's do Russell, the small caps, up over 1.3%. So the small caps outperformed. These are the clues that we look for. What is performing better than the rest? Usually we see NASDAQ outperforming, but yesterday with the interest rate cut and the press conference, small caps, they outperformed by 3 times. So, I mean, this is something to be aware of. I think also in pre-market, we have small caps as of last check doing a bit better than NASDAQ and S&P. And then this would be, I guess, the Dow Jones did the second best. So Dow Jones was up over 1%. So we like to kind of build a narrative and find out what's performing best. If NASDAQ's performing best, then that means that tech is a good theme to follow. If Russell is performing best or better, then small caps are a good thing to follow. So that's something to kind of keep your eyes on. Okay, just a quick reminder. If you haven't done so already, please feel free to click on the QR code right over Dessa. I think you have to scan it. Actually, you can't. I don't think you can click on it. But if you scan it, you will be able to enter our prize giveaway. This will be my last heads up. So those of you who did come on time to the office, you will be able to enter our office draw. So you go to the link, you fill out the form with all your information, and then we'll do the live draw momentarily. Also, one thing, if you're liking the video, please, I know it's sometimes you get access a lot, but to help us to continue to do this, all we kindly ask is that you subscribe to our channel, and then you also just hit the like button. It makes our life so much easier, and it keeps us making these shows, these videos, each and every week for you. And as a reminder, we will be back here tomorrow. Andrew and I will be here tomorrow, and we'll be doing another show of the pre-market show. So same time, same place, and we'll be covering, we're calling it Christmas Markets. That's the working title for now. Unless there's some big news today, then we'll probably change the name of the video. But join our show tomorrow on YouTube. Come back, and we'll love to have you. All right. One more message here. Reminder that there is a live chat. So if there is a chart that you'd like to look at, or a question that you'd like to ask, maybe there's something that you've come across or somebody said to you that didn't make any sense, please just let us know, and we'll be happy to kind of oblige and provide you with our comments as best as we can. Looks like we got Mr. David Thomas himself, the legend, the myth, the man, DT. How's it going, man? How's everything going? One of the best tennis players I know. I'll start off with that. One of the best tennis players I've ever seen. He has a slice and dice like Michelin chef. It's incredible. So yeah, Dave, let us know how everything's going. How's the family doing? Are you ready for Christmas? And how's the trading? Are you doing any trading? Are you more investing? Let us know. Let us know what's going on. So yes, thank you. I'm doing my best. I feel like sometimes I'm talking to myself, but we do have a good group of people, and I do appreciate you joining us today, Dave. I know you're very busy. Thank you very much. Thanks to everybody, every single one of you who has joined us today. Thank you for watching. All right, so we're gonna get over to our segment that we call Chatting Charts. And Chatting Charts, we kind of go through what I guess some of the popular names that are moving markets, and then we give a quick idea of what we're thinking and what we're looking at going into the trading day. And I guess I'll start off first with Oracle. So Oracle announced earnings last night, and oh my goodness me, this is a name to be aware of. So I did say we'll talk a little bit about earnings plays. This was the close yesterday, and almost immediately we dropped, and then it's just been what we call a downward trend, I guess is a nice way to put it. Down over 13%. So finished yesterday just about $223 a share. Where are we at this morning? 192.96. So not a good start to the day for our Oracle friends. And Oracle does tend to move quite a lot in the earnings season. After earnings, it does tend to move. So one thing that you could have done, and this is not legal advice, but what you could have done here is, before we got the close yesterday, and in advance, please forgive me for my bad handwriting. So what you could have done is, if you trade options, you could have basically gotten a call and a put, and the put would have paid off very handsomely if all things remain the same in the next 25 minutes between now and the open. So you could have gotten, let's say you've gotten let's just say a put. So one put and 1 call. So you would have ended up losing on your call. Let's say you were willing to risk a total of $200 on the call, and you were willing to risk a total of $200 on the put. This is options trading 101. If anybody is interested in options, please feel free to reach out to me. Okay. Now that put, let's just say, I don't know, let's give it a rough. So we're down 30. So let's say the put went up by, I'm trying to figure out a number here. Well, as long as the put went up more than 401, then you're up. Let's say that $200 investment in the put is now worth 1,000. Let's just say 1,000. It's going to be more, but just for the purposes of this illustration, you've lost on that put, which is fine and dandy because, sorry, we've lost on the call, which is fine and dandy because we were willing to risk 200. It wouldn't impact us in the long run. So grand total to start the day before the market even opens is you are up 800 buckaroos. And that's a strategy used by professional traders, Goldman Sachs traders, banks traders, hedge fund traders. It's a very simple strategy. I think the downside is if whatever you're trading, the earnings doesn't move the price. And if the price just sits there or it doesn't move enough, so it moves down but not down enough, then you're kind of stuck in a situation where this could be also a negative 200. So worst case scenario, let's call that worst case scenario. Handwriting is pretty good for Thursday. 400. So you have to be willing, and most people would say, no way, Jose, no way I'm willing to risk 400. Worst case scenario, 400. In this case, you would have probably netted more than 800 at the open here. So just something to think about. If you are interested in more information about options trading, we're always happy to kind of talk you through it. Palantir announced a deal with the Navy. Was it the Navy? There was definitely a Navy announcement. I believe I know it was some member of the Trump administration announced a deal with Palantir. So we did see a bit of a pop earlier in the week off the back of that, and now it's down a little bit after that Oracle news. So what I think the narrative is, we talked a bit about price action driving the markets. We talked a bit about positioning driving the markets, but right now the sentiment is very heavily weighing on markets this morning. We have the AI theme, and Oracle is a massive AI player. So if Oracle's showing some signs of cracking or excessive debt, or maybe not achieving the expectations that they've set for themselves, this could be worrying. And I think as a result, a lowering tide is lowering all ships. So in other words, Oracle's now weighing on the broader market. So we can look at a few other names here. Netflix and Thrill, we called our last episode, or Netflix and a few bill, whatever you want to call it. It's actually up. That's interesting. It's probably one of the few up in pre-market. So we'll be watching that. I think Paramount is trying to come in and eclipse the deal for Warner Brothers. Actually, Apple's up too. So a few names look like they're up this morning. Robinhood doing really well in the prediction market, and a lot of traders do trade with Robinhood. It's actually down 2.1% going into the open. And then our good friends at NVIDIA. NVIDIA's down 1.52. This is the big mama, where we like to follow NVIDIA for just for a bit of perspective on the AI theme. Last one we'll look at is Tesla. Tesla's down slightly, but not as bad as some of the other big names. Okay, we are still we're up to time right now. We have 1 minute left to cover everything. 1 minute left to cover everything. You know what we'll do? Before we do leave, I want to just quickly mention that we will be doing our very first ever 12 days of Christmas, the financial edition. So what this means is every single day, every day, from Saturday until Christmas Day, we will be featuring our 12 favorite YouTube episodes. So this is a brainchild of mine. We have a lot of content out there online. So we've basically filtered out a lot of the noise, and our whole thing is trade above the noise. Don't let the noise get you down. So if you're interested, starting this Saturday, every single day until Christmas, we will have a fantastic educational video that's going to give you some insights into how to trade better, how to improve your trading going into the Christmas season, and then also into the new year. So watch out for that as well as we start to get ready for the Christmas holiday. All right. We got another message here, a couple messages. There we go. The hedge just mentioned Oracle. Is that a strategy often used, or just when you're unsure of how a company will move? So this is a great question here from our good friend David Thomas. So it's very, very difficult to predict the future, and I've been trading for just about, I would say, just over 20 years, and I'm not good at predicting the future. So you could have the absolute peach of a stock, and everything is pointing to positivity. It's beat all the expectations. It's coming out with new products, or it's coming out with new deals. And after the earnings announcement, it crashes. And that's happened, and that continues to happen. And so what I've realized is my job is to manage risk. And as a risk manager, I want to be able to protect from a downside surprise. So yes, there have been some times where more signs are showing that it's more likely to go up. So on a probability perspective, maybe it's not 50-50. Maybe it's 60-40 to the upside. So in those situations, sometimes you may decide, look, I don't want to risk, in that example, I don't want to risk 400. I'll only risk 200 and go for one side. Worst case scenario would be a $200 expense. That's okay. But probabilities are showing that it's probably going to go up. That's also a tweak that you could make to it. But if you're managing risk, you want to, in a way, you want to be market neutral. So there have been earnings plays. So for example, that $800 profit is probably closer to 1,500 in real, if you would have really done that trade. So your $200 investment is probably now worth 1,700 gross, and then 1,500 net. A $200 investment making 1,500, that's a good return. I wouldn't mind having an insurance policy for $200 for an upside move, and it doesn't, that goes to zero. So I kind of feel like it's worth it, if you are right and you do get a big move, to have both sides covered. So the more I do this, the more I find it's better to be market neutral. And when I say market neutral, you have both upside exposure and you have downside protection. In this case, you would have still made 1,500 in that scenario from a $200 investment. So that's my long-winded answer to a very, very great question from Dave Thomas. It's very difficult to know which way it's going to move. I think even some of the legendary traders out there would not be 100% sure on the direction, especially after earnings. Earnings can be extremely unpredictable. But yeah, thank you very much for your question. Just so everybody's aware, Dave did ask about whether or not the strategy that we mentioned is if you're unsure on how a company will move. I've seen over 100 times where it's ticked all the boxes. Everything is pointing to a beat, better than expected earnings, better than expected forward guidance, and then the stock's down 30%, 40%. So you kind of have to weigh up that risk, and that's all you're doing. This is not a game. This is not gambling. This is managing capital and managing risk. And so my philosophy is I want to manage risk as best as I can. And so I think a lot of people went into the Oracle earnings last night thinking it's going to be bullish, it's going to go up. And if you would have just gotten calls, or if you just would have bought it, let's say, or going long, you would have to sit through what could be an extended dip. If you would have had downside protection, then your $200 investment would now be $1,700 profit. So I think it's helpful, even when you are sure, to try and protect from any eventuality. And look, the market is either doing one of three things. So Oracle could have done one of three things last night. It could have gone higher after earnings. It could have gone nowhere after earnings. But what did it do? It went lower after earnings. And I don't think the majority of market participants, at least the consensus, was prepared for that. All right, so we got Eugene Bowl in the place to be. I heard the accent. Good work, bro. In a small group here with some locals on our own trading journey too. All right, well, shout out to you, man. Thank you. Curious how you found out about the show. But yeah, thanks, man. Small groups are great. I highly recommend anybody, especially if you don't have a small group already, or if you're in the early stages of your trading journey, please, reach out to people who are doing it, especially people who are positive, people who are successful, people who are consistent. That helps. Not everybody's going to be consistent all the time. It's great to have a variety of personalities and styles and techniques and strategies and varied experiences, also various backgrounds. I met a guy who actually is a quant. Went for pizza with him and his newly married wife on Wednesday. And so he's coming from a completely different perspective. He has a background in computer science. He said that he used to be a hacker, a good type of hacker. So his background and his view of the markets is completely different from mine. And I think that's what it's all about. So thank you very much, Eugene, for messaging that. And yeah, I'm trying to maintain my authenticity. I'm glad you heard the accent there. And continue on your journey, man. Keep up the good work, and thanks for joining the show today. Looking at the other live chat here, we have should we post now or when we won? So ISO, if you would like to post, you can post now. Let people know what show you're watching. That will help to bring about a little bit more awareness. But also, once you have won, or if you do win, then just post in your X or Insta. Just letting people know, confirm the fact that you did win a $5,000 account once it does happen. I don't know if that's your way of speaking it into existence. And if it is, well, very clever on you, and all the best. We have Michelle Juptum in the office saying nice insights. ABKRCH also in the office today. We have hi Mandela Santa. So that's coming from Triza. Nice to have you in the office today. Great session. Looks like we also have RBFX. Good explain. So yeah, I mean, sometimes I do think, and I've talked to many people about this, I do think that a lot of the financial institutions do try to, because it's in their best interest, they're a business, they do try to overcomplicate things, or at least try and make the things difficult for the average person to understand. And I think part of my journey has been to demystify a lot of this stuff. And so I think it's important when you get a good grasp of something and you're always learning, it kind of like putting the puzzle pieces together, I guess, in a way. And the more pieces you have, I think the more confidence you have, and the better you'll trade. All right, so I did want to just quickly share a trade that I did. So we did 2 trades, one yesterday and one today, and I was asked to share a little bit more about the trades that I do and how I trade. So what we mainly trade, or what I might mainly trade, is the S&P 500. We use options to do that. We did, if you rewind this, go back to the Oracle earnings example, we were talking about options there as well. But yesterday we got the Federal Reserve announcement. I'll just quickly share that trade from yesterday. If we go, let's go here. Wait, I already have it. No real move after that unemployment claims, which is, I guess, to be expected. So this was yesterday's price moves, and this is kind of how we like to look at the broader market. So instead of trading Apple, Nvidia, Tesla, Oracle, we also do trade the bucket or the index, the S&P 500. And a few people ask why, and I think the answer is pretty simple. Instead of trying to find a needle in the haystack, instead of trying to find that great company that is going to make you enough money for the day, or enough for the week, or enough for the month, we don't look for the needle in the haystack so much, or all the time. We just go in and we buy the whole haystack, and we sell the whole haystack. So we're just buying and selling the whole haystack is kind of how I think about it. So yesterday we got Federal Reserve meeting. So at 3 o'clock. So this is Bermuda time. Shout out to all the people in Bermuda this morning. So we got the announcement here from the Federal Reserve. The initial move was higher. Then we kind of pulled back a little bit just to test everybody's patience. Went higher again, so made a new high of the day. If we kind of go this way, we can see where we started the day. And then on this second pullback, that's where we got in. So we got in somewhere here yesterday after the Fed meeting and after the Fed press conference. So we got in there and we got out here. First sign of weakness, I call it. So the red is the exit, the green is the entrance, and that was pretty much yesterday's trade. The reason we got in where we did, everybody wants to know the why. A few things. We do find that there's usually, and this is from our good friend Jerry. There's something he calls it ABC. So usually you'll get the initial move is usually the right move, and then you'll get a pullback. So the pullback would be B, and then you'll get the C tends to be a continuation of that A, or we return to that A. So and this is, I think this is not as widely talked about as it probably should be, but if you think this was the announcement here of the interest rate cut, we got to move up. That's A. We pull back twice, I guess you could say. That was B. And then the third was C. So we were leaning on this ABC. It's also a great Jackson 5 song. See if I can pull it up for the playlist later on today. It's easy as ABC. Doesn't work all the time, but we usually see the impulse move, or the first move is the clue. Then everybody gets tested. How sure are you? How serious are you? How patient are you? Because the markets, all they're doing is taking money from the impatient and giving it to the patient. not the patient as in the person in the hospital, but the patient as in the person who is patient. And we caught the move. So yeah, that was a good trade for yesterday. And then this morning, there was a nice opportunity which we caught in pre-market. We don't often trade pre-market. This is S&P pre-market. And we caught a trade this morning. So it would have been pretty much from here. And then we got out just before the show because as a risk manager, I don't want to be in a trade, especially a short-term trade, during a live YouTube show. I want to be giving you all my full attention. So this was the second trade that we got this morning. Nice little follow through. Small little tidbit. I find 9 times out of 10, the day after Fed Day, you usually get a pretty nice swing in pre-market. So just keep that under your hat. Doesn't happen all the time, but because there's so much liquidity slushing around during Fed Day, I find the night of Fed Day, so once markets close in the US on a Fed Day, you'll see a lot of volatility, usually a huge gap. So we've got pretty much just that. So we finished yesterday up here on the S&P, came all the way down. I think this was our Oracle friends dragging or weighing down the index, also weighing down the broader market. And then since then, we got our friends over on the London trading desk. This was more or less the London open here. London said, "You're gonna give us S&P this cheap? You bet your boots I'm picking that up, mate." And so London traders have pushed us back almost, not quite, but almost to where we finished yesterday. So this is how I think about it. London traders were willing to kind of scoop up on the cheap and have moved us back. We still got another 14 minutes until markets open. But yeah, that's kind of my thinking process for the trades. Okay. What I'll do now also very quickly is I'll just share. So this was yesterday's trade. So like we said, we got in here, got out there after the Fed announcement. From a perspective of the actual trade, we bought the SPX 6855 call. And is that 55? Yeah, 65. SPX 6855 call for $12.10. We ended up getting out at $27.90. So that was yesterday's trade. And then this morning, see if I can find this morning's trade. There we go. So this morning's trade, we ended up getting the 6865 call. And we got in at $9.90 and we sold it at $18. That was this morning, December 11th expiry for the 6865 call. So when I have a nice sort of back-to-back series of trades, or when I've made a good amount on a trading day, the first question is, how much is enough for today? And I'm almost minded to say, look, there's no need to trade today, no need to put any more trades in today, because we've kind of, we've done what we need to do. I'm going to see if I can find. There is a cool little graphic thing that we sometimes use, but yeah, it's very important that you remember the why. Why am I doing this? Am I doing this to always have a profit? Am I doing this to always beat my personal best record? Am I doing this to impress somebody? I'm trying to impress, my girlfriend or my friends who trade. They've been trading less than me or for shorter than me. So here we go. This is the chart that I sometimes will go to. Here we go. Okay. So yeah, I mean, the question now, okay, we made about 800 today so far on the day. This is a good way to keep things in perspective. If, for example, you were to, let's see, yeah. So if you were to make $20 consistently every day, the market's open roughly 250 days out of the year. $20 a day is $5,000 at the end of the day. Today we made 800. So if we did that consistently and we stopped once we hit 800, we would have made over 120 grand for the year. So my question to myself is, I'm a risk manager. I'm in this for the long term. Is $800 this morning in pre-market enough? Or do I want to risk giving back some of that? So my 800 could quickly turn to 700, 600, 500, 400, and then I'm kicking myself. So these are all the things that are kind of going into my head. We got about 10 minutes till the market's open. So we're going to quickly do the prize giveaway. Thanks everybody for participating. Looks like we have not that many entries. Oh yeah, okay, that's a little bit better. So we got a few entries here. I'm going to quickly just copy and paste everybody's name. Here we go. YouTube name. Okay. So we got RBFX, Tesla Trader. Let's share this. RBFX, Tesla Trader, Trizza in the house, Kian Nils, Michelle, Isildur, Dave Thomas is in there as well, ISO, Dequan Crockwell, and Jackie Kumar. I think I covered everybody's names, so we'll copy that and we'll open up a fresh random name picker. Okay, and we'll copy them. Sorry, we'll paste them here. So all the best to everybody. Thank you to everyone who has entered. Is that right? Yes. Is that right? Actually, that I went too far, I think. Here we go. That's it. All right, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Whoa. Something's going up. I want to make sure I'm not, I went too far. Here we go. Let's do this again. These are the joys of being live. Should be 11. Okay. Any questions that you do have, please, you have about 30 seconds to ask them, and then we're going to hop off. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Bang. All right. Now we're good. Okay, and where's the drum roll? Drum roll, please, Mr. Selector. Mr. Selector, put on the drum roll, please. All right, here we go. All the best to everybody. And the winner of the $5,000 account prize giveaway is none other than Jackie Kumar. Congratulations, Jackie. Make sure you post in your Insta and X and tag us. Yeah, congratulations for Jackie. Thank you everybody who has joined and who did enter the prize giveaway. We do appreciate every single entry that we receive, and we thank you all. We thank you all. And that leaves us with nothing else but to say our goodbyes to everybody. Yeah, today probably won't trade. We're happy to kind of protect our capital. Our goal is to be here for the long term, right? So I don't care about how much money other people are making or what's enough for others. I know my job is to extract funds from these markets, and for today, I feel like I've done enough. Maybe I'll have a look at the open. If there's something that's so blatantly obvious, I may try and take a trade. But like I said, I'm not trying to give away or give back any of that 800 that we're already sitting on for today, at least in the short-term S&P account from that perspective. Okay, thanks everybody. Thank you for watching. My name is Mandela. We are broadcasting simultaneously or streaming, I guess is the new phrase, simultaneously on X. We're also on YouTube, so make sure if you haven't done so already, just smash that like. That keeps us going, helps the algorithm, as you know very well. Thank you everybody for watching. Like I said, we'll be back tomorrow to do this all again. And until next time, everybody, happy trading.